Giuliano, welcome to the program.
Thank you.
Giuliano, Evergrande gave iron ore markets a pretty bumpy ride this week, but it seems concerns about the Chinese developer may have been pushed to the background a little bit for now. Do you think this is over?
No, I think there's definitely more to play out here. I think what's happened at the moment is the Chinese authorities are buying some time to really analyse the situation further. I think clearly they actually want to take some steam out of their property markets. We've seen that China's really come out with new rhetoric lately around common prosperity in China, and they've talked about property being for living in, not for investing. And so I think actually this whole Evergrande situation actually ties into some big policy shifts up in China, and I think we can see further to play out here over the longer term.
Has there been anything else swaying into iron ore price pressures?
Yeah, it certainly has. I mean, China had a stated policy that steel production would not increase in calendar year 21 over what it was in calendar year 20. Now, we saw in the first half of calendar year 21, steel production in China was actually running at about 12% above last year's rate. So what that meant was the steel mills now have been regulated very heavily to reduce steel production to meet those quotas. And on top of that, we've seen this policy being driven to some extent by the fact that China's obviously hosting the upcoming Winter Olympics. They want to promote a very clean and green China, and clearly the steel mills are some of the biggest polluters in their environment. And so there's a number of factors that are really working here to see steel production decline, which in turn is seeing a slump in the demand for iron ore.
Do you think we're in a new price range norm now?
Look, unfortunately, I don't think we're quite there yet. I mean, first of all, we need to go back and look at where iron ore came from. When it was over $200 a tonne, clearly that's what we would term a blow-off top in the market. We had a strong fundamental market, but there was a lot of speculative money starting to enter the iron ore market. I don't think anyone really expected the iron ore price to hold over $200 a tonne. We're now sort of sitting back at around $100 a tonne. We've seen some stabilisation in the last few days, but I don't think that we're at the bottom yet. If history tells us anything about commodity markets, it tells us that they tend to overshoot on the up, but they also tend to overshoot on the bottom. So I think what we really need to see is a capitulation sale in iron ore where it might test $50 or $60 a tonne, and then we start to see some stability from there. And my best guess at the moment is the iron ore market's probably find a new level around $80 a tonne into the medium term.
Once the Winter Olympics are over and China's desire to have clean air as the eyes of the world are on it for the Games, will demand surge again, do you think, at least in the short term?
Yeah, I think how iron ore responds coming out of that will depend on a number of factors. One of them will be what happens on the supply side. So Vale in Brazil, the big iron ore producer, has obviously had many stalled attempts at recovering lost production from a number of years of issues that it's had there with some of the dam disasters. So the market will be looking at how well Vale can enter calendar year 2022, because they could actually increase supply by some magnitude. We've also got obviously a couple of the second tier iron ore producers are looking at increasing production as well. So we need to look at the supply side of the equation as well. We also need to see how much stockpiles grow over this next 6 months. I mean, if stockpiles grow substantially over the next 6 months while the steel mills have a lower demand, then that will provide a bit of a balance and a bit of a cushion to any price rises moving forward into 2022. So my best guess again is really that the iron ore market has a capitulation sell down. It stabilises at some point around that $80 a tonne mark, but then it takes a while to work through the excess inventory that will have built up in the system before we see any sort of a price spike again of note.
How critical is the political side of this? Australia's relationship with China is strained. Do you think that's playing into prices as well?
I definitely think it's one of many factors playing into it. I think China has clearly tried other tariffs on some of our other exports. Obviously, iron ore has been a key ingredient that they can't substitute. Their domestic iron ore production is quite low and it's quite low grade. I don't think they'd be particularly upset at the moment seeing a softer iron ore price. On the flip side though, some of our other exports such as LNG and indeed coking coal and thermal coal are now having very strong rallies, and so that is offsetting some of the downside in iron ore with regards to trade of surplus here in Australia. But I think China's realistic that there's only so much they can do to impact the price of a commodity, but I think it's probably a benefit that they're not upset about at the moment that the iron ore price has been slow, as they've tried to control steel mills to clean up their pollution, and also as they've tried to slow their property markets up there.
We saw with both the federal and most recently WA state budget how much of a windfall the high prices delivered. Will the lower price range, especially considering current lockdowns, create a massive budget challenge ahead?
My understanding at the moment is most the Treasury forecasts are still using $55 a tonne. So they've been very conservative in their forecasts. I think they've learned from previous years that if you start to chase a spot market with your forecasts, then you can end up with terrible deficits in your budget. So at this stage, from a deficit perspective in the budget forecasts, it still looks okay. Inevitably, in real terms, there'll be a lot less royalties flowing into Western Australia on the back of the falling in the iron ore price. So any possible surplus will definitely be much lower. But as far as amending to the actual forecast figures in the budgets at the moment, I don't think that will be necessary yet.
Giuliano, Sala, Tenna, great to chat. Thank you.
Thank you. Have a good day.